Hello, everyone, and welcome back to Boni's Life, your go-to channel for navigating the exciting and often turbulent world of cryptocurrency. This week has been an absolute roller coaster, and I know many of you are wondering what in the world is going on. We've seen a major market correction, a new Federal Reserve Chair nomination that has everyone on edge, and a cascade of liquidations that have shaken even the most seasoned traders. So today, we're going to break it all down. We'll review the state of the crypto market, look at the events that shaped this past week, and give you the key triggers to watch for this weekend. Grab your coffee and let's get into it. The global cryptocurrency market cap currently stands at approximately $2.91 trillion, which is a significant 2.1% drop in just the last 24 hours. The 24-hour trading volume is a hefty $215.9 billion, showing a lot of activity in the market. Bitcoin's dominance is holding strong at 57.1%, with Ethereum at 11.4%. The market is clearly in a state of extreme fear, with the Fear and Greed Index plummeting to a score of 15. This indicates a high level of anxiety and uncertainty among investors. This past week has been a brutal one for the crypto market. We saw a significant downturn across the board, with most major assets down 3 to 8%. Bitcoin is currently trading at around $82,968, down about 7% for the week. Ethereum is also down around 7%, trading at about $2,731. This sell-off was driven by a perfect storm of factors, including a massive $1.8 billion liquidation event, significant outflows from Bitcoin ETFs, and the nomination of a new, potentially hawkish Federal Reserve chairman. We also saw a dramatic crash in the precious metals market, with gold and silver taking a nosedive after hitting record highs. This has added to the overall risk-off sentiment in the market. Let's take a closer look at how the week unfolded day by day. On Monday, January 26th, we actually saw a brief moment of optimism. It was the first positive day for Bitcoin ETFs, with a net inflow of 78 BTC. This was largely driven by inflows into IBIT and BTC. However, this optimism was short-lived. We also saw the peak of the River token, which had an incredible 884% rally from January 1st to the 26th, before it began its steep collapse. Tuesday, January 27th, marked a turning point for the West. We saw the start of significant outflows from Bitcoin ETFs, with a total of 1,670 BTC leaving the funds. IBIT and FBTC saw the largest outflows. On the same day, OKX announced the delisting of ELON trading pairs, which added to the negative sentiment. The Digital Asset Treasury Conference also took place, with a presentation from LQWD Technologies, but this was largely overshadowed by the negative market news. Wednesday, January 28th, was a day of contradictions. While the crypto market was showing signs of weakness, the precious metals market was on fire. Gold hit an all-time high of $5,600, and silver reached a record $121. This divergence between crypto and traditional safe haven assets was a key theme of the week. Meanwhile, Bitcoin ETF outflows continued, with a net outflow of 219 BTC. Thursday, January 29th, was a bloodbath. The crypto market dropped 1.7% to $3.06 trillion. The biggest news of the day was the massive outflow from Bitcoin ETFs, with a staggering 9,160 BTC leaving the funds. This was the largest single-day outflow we've seen in a while. The tech sector also took a hit, with Microsoft stock dropping 12% after its earnings report, which dragged down the broader market. The White House also held a crypto summit, inviting executives and trade groups to discuss the future of the crypto market, but this did little to calm the market's nerves. And that brings us to Friday, January 30th, a day of reckoning for the crypto market. Bitcoin hit a new 2026 low, dipping below $85,000. We saw a massive $1.8 billion in crypto liquidations in just 24 hours as leveraged traders were wiped out. The big news of the day was President Trump's nomination of Kevin Warsh as the new Federal Reserve Chairman. This is a significant development, as Warsh is seen as a hawk, and his policies could be bearish for Bitcoin. We also had the first monthly options expiry of the year, with $8.8 billion in Bitcoin and Ethereum options expiring. And to top it all off, the precious metals market crashed, with silver dropping 20% and gold falling 11%. Now let's talk about the crypto industry calendar events that took place this week. The most significant event was the $8.8 billion options expiry on Friday. The max pain level for Bitcoin was $90,000, but the price was trading well below that at around $82,761. For Ethereum, the max pain level was $3,000, with the price trading at around $2,751. This shows that the market was not expecting a significant move up. In fact, analysts at Deribit noted that the demand for downside protection had ramped up, indicating that traders were cautious. We also had a number of token unlocks this week, with a total of $464 million in token supply hitting the market. On the regulatory front, the CFTC and SEC held a joint event on harmonization, and the White House held a crypto summit. These events show that regulators are paying close attention to the crypto market, which could have long-term implications. So, what does all of this mean for the weekend? Let's look at some of the key technical and fundamental triggers to watch. From a technical perspective, Bitcoin has broken below its 100-week simple moving average, which was a major support level. The next major support zone to watch is around $75,000. If we break below that, we could see a further slide to the 200-week moving average at around $58,000. On the upside, we need to reclaim the $85,000 level to signal a false breakdown. A sustained move above $95,000 would be needed to restore a bullish outlook. On the fundamental side, the biggest trigger to watch is the confirmation of Kevin Walsh as the new Fed chair. Any clarity on his policy direction will have a major impact on the market. We also need to keep a close eye on the Bitcoin ETF flows when the market opens on Monday. Any signs of institutional buying could provide some much-needed support. And of course, we need to watch the broader macro environment, including the performance of the stock market and the US dollar. So, what's the trading strategy for the weekend? For bulls, it's a time to be cautious. I would wait for a reclaim of the $85,000 level before entering any long positions, and I would use tight stop losses. For bears, this could be an opportunity to short rallies toward the $85,000 to $86,000 resistance level, with a target of $75,000. But as always, risk management is key. I would reduce my position size, use stop losses, and avoid leverage in this volatile environment. This has been a wild week in the crypto market, and the uncertainty is far from over. We're in a period of extreme fear, and the market is on a knife's edge. But as we've seen time and time again, these are the moments that create the biggest opportunities. So stay informed, stay disciplined, and stay safe out there. Thanks for tuning in to Boni's Life, and I'll see you in the next episode.